Hi there, my name's Michelle Marsland and Marsland Accountants, and budget day is looming. Just a few more days to go. And what are the predictions? Oh, there's hundreds of them. There has been rumours for months of what sort of Rachel Reeves is going to do to us this time. One of the things we can be assured of is there will probably be a few leaks over the next couple of days, just to warn people of what's likely to happen, as there has been many leaks already in the last 6 months. We can't change it. We can try and predict it, but the one thing we can't do is actually change anything that happens. Now, the one thing I would say as well is I've been through many a budget in the past, and often people have been asking a lot online actually. Does it mean it will change today, or does it mean it will change 5th of April? Now, in my experience, what the governments often do is they change things today that they know that people might make a bit of a rush to go and sell a property or sell some shares or whatever. If they think that's going to happen, they will change it today. All right. So if you've already got some plans to sell something, you better have done it pretty quickly, actually, already, because it ain't going to happen otherwise. Um, they tend to do that just basically so that people don't rush and go and start selling all the properties over the country just to save a bit of tax. Although I notice actually, Marslands, we specialise in property, and there have been a few people selling over the last few months. Now, the one thing I would say to anybody is if you're thinking of selling a property, do it for the right reasons. Do it for yourself. Do it because you want to sell that property because it no longer suits you, or whatever, and you want to invest the money you're going to get in, I don't know, a cruise around the world or whatever it may be. It might be into a savings account, but it looks like they might be thinking of changing how much you can put into an ISA as well. So there's all sorts of rumours going on. But I would say one of the things is just do it because you want to do it, not because the government's saying it's going to cost you more. So, what are they looking at? Well, capital gains tax has been one of the biggest ones that they've been looking at to say that capital gains tax is likely to change. Yeah, I mean, over the last few years, the annual allowance has been going down anyway. So, we're currently down to £3,000. So, that's been costing people anyway when they've been selling their properties, etc. So they may look at reducing that down to nil or whatever, who knows? So that's one way of doing it is by changing the allowances that you're allowed to have at 0%. The other thing they've been talking about is capital gains tax on your own home. I think that would be absolutely crazy, but yeah, who am I to say? Um, but they may look at changing other things to do with your own home, which is inheritance tax related instead. That's maybe where they'll be going with that one. Yeah, so capital gains tax, the rates, they're looking very likely that they will change them. We've had some quite reasonable rates in the last few years. So it's one of those things, it's an easy pick, isn't it, really? So yeah, so chances are rates might be changing. But there's things you can do about that. Make sure that you're doing your own tax planning. Sort of we have clients who are retiring and that, and what they do is they tend to sell before they've retired. Well, sometimes when people are retired, they have a lot less income. So they're not 40% taxpayers anymore. So think about when plan it with your accountant, all right? Plan it first. Don't just do it and then go, oh, this is what I've done, because I can't help you then. All right, so that's one of the things, capital gains tax. Think ahead, think about what you need it for, and whether you want to pass it down to the kids, that sort of type thing. There's lots of things you can be doing in the capital gains tax. So inheritance tax, that's another biggie that they're thinking of doing something to. An inheritance tax. Most people don't know it's a problem until they died, I'm afraid to say. At Marslands, we do tend to speak to our clients if they're getting quite high in their inheritance tax, just because it's an area that can catch up with people, actually. They think, oh, I just got a couple of properties and a bit of this and a bit of that. And then suddenly they're well over 1 million or well over 2 million, and suddenly they're they've got an inheritance tax problem. And one of the things is at the moment is you get inheritance tax on your own home if that's passed over, and that actually can be 500,000. That can be quite a lot of money, sort of thing. So I think, well, that goes up to 1 million basically, but that can actually increase your threshold quite considerably. So maybe they'll look at getting rid of that one. Who knows? But yeah, inheritance tax looks likely to be hit in some way or shape or form. And there's quite a big inheritance tax ban, but that's been the same for quite a few years. So by not increasing that, I mean, inflation's still going up. So just by not increasing the thresholds, you'll still be hit more than you would have done before. Pensions, that's a biggie that people have been talking about. Yeah, there's been all sorts of rumours around pensions. One is to do with inheritance tax at the moment. If your pension is passed over to your future generations, basically it can be inheritance tax free. So that's great, isn't it, for people who don't actually draw on their pensions? But they're talking about taxing that one instead. And if that was the case, that would change things quite a bit. Also with pensions, the tax-free lump sum, they've looked at whether that will be withdrawn or at least maximised as to how much you can have as a tax-free lump sum, just bringing that down a bit. Another little rumour I read actually, which is this is the problem with so many rumours, is what about putting employers' national insurance on pension contributions that you make for the employees? That could be quite costly, especially for those director-owned companies. That sometimes that's a way of putting money away for your future is to put into your pension fund. So if they put employers' national insurance on that, currently if the employers' national insurance is 13.8%, that's quite an extra lump, isn't it? On top of like a £10,000 contribution, that could be quite an extra lump. So that could be something that could hit. Unfortunately, the small owner businesses, once again, they can be hit because of doing that. Or even if you're putting in pensions for your employees, that actually paying employers' national insurance on that could be quite expensive. Employers' national insurance is possibly a bit of an easy hit for the government because it's only people who employ people who can have to pay it. So most of the general public won't know nothing about it. Um, so increasing that percentage wise, or maybe just getting rid of the current exemption that we have for £5,000 that we don't small employers don't have to pay. So it might be just one of those two little things. It's just a little tweak here and there, gives the government a little bit of extra money, and most of the general public don't know anything about it. So yeah, unfortunately, it's the employers who will do, and then it might not hit till next April or maybe a bit later, and so by then everybody's forgotten about it. That's another government plan often is to announce it now, bit of a hoo-ha, but then actually doesn't come in for a year or two. And then in 2 years' time, people go, oh, why am I spending more money? Yeah, because that was something they announced a while ago. What else we got? Stamp duty. Yeah, stamp duty will affect people with properties, but most of the time, actually, if you're buying buy-to-lets or whatever, you're paying the extra 3% anyway. Same with the limited company, you're paying the extra 3% stamp duty. Maybe they might increase that rate. Who knows? That's a possibility, isn't it? 3% up to 4%. It's only a percentage, isn't it? And you don't have to go and buy something, do you? So there may be something like that. That's the sort of thing that probably would change on the day. Um, they're talking about changing the stamp duty rates anyway, are changing anyway next April. So maybe a few more tweaks there to do with first time buyers or something like that. Or maybe just, a few more tweaks in the ranges or whatever, thresholds and that, just bringing the thresholds down a bit. Those sort of things can bring in a bit of extra revenue. And nobody really notices unless they're buying something. Yeah, so VAT. VAT actually is something that I think they seem to stop looking at too much sometimes. I mean, when we were in the EU, we didn't have much choice of what we could do with VAT. We're very much governed by them. But since we've left the EU, they don't seem to be doing a right lot with VAT. But there's a lot potentially I think they could be doing. To make it simpler, that'd be one thing, wouldn't it? We'd love that if they made VAT simpler. Goodness. But then accountants wouldn't have a job, would they? Uh, but yeah, VAT, that'd be something to look at maybe. And think if you're in property or whatever, you might think, well, that doesn't apply to me, but it does. You see, if suddenly you have to pay 25% VAT on the purchase of the washing machine or the repair to the building or the windows or whatever, it could make a big difference to you, couldn't it? So, yeah, VAT is something for small businesses as well. They may look at the threshold, and it did go up last year, but it's one of those things that for many a year they threatened to just take away the VAT threshold. Some more small businesses would have to be VAT registered. That would be probably something that would come in within the next, 6 months if they were going to do something like that. But it is something that, yes, it's only hitting part of the population, not all of the population. Now, income tax, I think so far they said they're not going to hit it for the small man in the street, the poor people type thing. Yeah, they're not going to hit that sort of level of person. But what they might do is change the thresholds, so more people become 40% payers, and more people don't get so many allowances. All these little tweaks on savings allowances, things like that, people take for granted, and it might be that they just make those little tweaks somewhere else. So watch this space, really. We don't know what's going to happen. But we'll find out in under a week's time. Council tax, that's another one they can have a little go at. We've just had our council tax last April, so whether they change something that brings in next April, more and more councils anyway of getting rid of the threshold where if you have an empty property for a few months that you don't pay tax. So that's gone down and down and down for each council over the last 5, 10 years anyway. So, but just maybe looking at the basic council thresholds, the exemptions for when there's one person living there, those sort of type things. Just looking at those sort of rates, it's an easy hit for next April, isn't it, really? And people won't remember that they were told in October. So. Yeah, so there's lots of areas of the taxes that the government can be looking at, and we look forward to hearing the speech next week, knowing full well that whatever's in the speech is not normally what's going on behind the scenes. Um, and sometimes we get a little bit of a government release as well on that same day. I tend to look at that as to what's going to be happening, and even then, sometimes it doesn't get through Parliament, so it doesn't actually go through, but we will see what we will see. So yes, not long now, and we will find out what Labour's first budget is all about. Looking forward to it. Time to shine.